What's up, traders? Alright, welcome back to another special video that I've made for you guys. So just before we begin, we're going to discuss supply and demand and why it's so important to use this in your trading and how it can definitely benefit your trading. So before we start, if you're new to this channel, please subscribe, give it a thumbs up, leave a comment below and tell us what you think and if this was helpful, guys. Alright, so let's begin. So let's discuss quickly my trade on Friday that I took, RKT. Okay, recent IPO. Alright, for those of you that don't know what IPO is, it stands for initial public offering. So this basically was a new stock that entered the markets on Thursday. As you can see, it opened up around $18. So it's not showing Thursday's price action for some reason. It's showing Friday's after hours, and this thing squeezed from roughly 20 to 50 to 25 just before the bell. Alright, and we're going to discuss my trades, and then we're going to talk about the importance of seeing where the supply and demand is in your charts, guys. Alright, so as you can see, the bell rang the first 1 minute. It's a 1 minute time frame. We got a huge push. Okay, broke out the pre-market highs. So my entry on this was in here. Okay, as soon as this first 1 minute bar finished, we got a brief dip, and then bam, the stock went up 1.5 points. Right, I scaled out towards 26 plus in this area. As you can see, the thing took a massive dump straight after. And the reason why I use the 1 minute is because at the open you want to be quick and you get better price fills and better entries, guys. Okay, as soon as the open is pretty much done, I'll hop over to the 3 minute and start trading the 3 minute. We usually don't trade anything after 10 AM Eastern, so first 30 minutes is where we make our money and leave. So let's discuss supply and demand, the very important topic of this video. Clearly demand exceeds supply the first 1 minute of the market open on RKT. Okay, so more buyers than sellers, clearly first 1 minute. And as you guys can see, this fat green bar had a lot of orders inside of it. You don't see it on the chart, but this is how institutional hedge funds, pro traders trade, guys. They look for the clear move. Alright, so this is their protection. Once the stock dips to fulfill some more orders that were left out on the table in the initial push, this is where you get, and this is why you get a little dip to fulfill some more orders and then go long. This happens pretty much on every stock, any time frame, any time of the day, pretty much. Okay. Big green bars, big fat red bars is what you want to look out for. I'm pretty much giving you the whole strategy here. Okay, so as you can see, I'm gonna hop over to the 3 minutes to show you guys what I mean, so it's a bit more clear on the eyes. As you can see, the 3 minute, you would have missed out the whole move if you waited. This is why the 1 minute is very crucial and important at the open. Okay, and after that, this thing dumped. Look at this fat red bar, a bear 180 setup. Once this occurs, guys, you're gonna initially get a dead cat bounce towards this area inside of this red bar to fill some more shorts, then new leg down 80% of the time. Okay, so let's talk about why you shouldn't buy breakouts or breakdowns. So as you can see, the stock dropped, alright, and then it formed a new low in here. And let's talk about demand once again exceeding supply. As you can see, once this new low was broken, we got a little push towards the support area of 23, a round number. We'll discuss round numbers in another topic, which is very important also. Right, and then we get another fat green bar. Okay, inside of this green bar, demand exceeds supply. A lot of orders. Alright, off a new low especially. Once we see that, then we get a push, a brief push most of the time. So you can chase some up in here. It's a bit more riskier. I wouldn't recommend it. I would wait for this dip here that occurred inside of this green bar. Your entry, low risk, huge reward. And look at that next leg up, guys. You want to scale out once this high breaks. You want to scale out on new highs or new lows, no matter if you're shorting or buying. Alright, rookie, untrained novices, they are trained to buy breakouts or breakdowns. Little do they know is once I see a new low, I want to be buying it. Once I see a new high, I want to be shorting it if the setup occurs. Okay, you gotta think the opposite, guys, of everybody else. Otherwise, how else are you gonna succeed in this game? Okay, so this was on a 3 minute. We can hop over to the 5. Same thing, guys. Look at that. New low. Look at this fat green bar. Pull back into this zone. New highs. You get another fat green bar. Little dip. New high. Okay, can you see the importance of big green bars or red bars? Either way. Okay, when demand and supply meet, one or the other, you know, is going to come on top. As you can see down here again, brief new low by a few cents. Rookie traders are shorting a breakdown and they're getting crushed. Little pullback, look at that. Second leg. This was all on RKT, this stock, but this happens all over the board. This was our little watch list on Friday, so I left. For those of you that are asking what broker this is Comex Pro. Okay, I am based in the EU, guys. Okay, so I am using CFDs when I trade. Benefits of that is that you get instant fills and can pretty much short any stock. They do have restrictions on some penny stocks. But we don't really trade penny stocks. We trade mid to large cap stocks. Okay, that's where the real money's at. So yeah, this is the 5 minute. There was another example on AMD. I traded also, I think, on Friday. Not at the open. I took it down here after this huge dump. Okay, it's another beautiful strategy that I love. Buying the bounces. Okay, see this big green bar, see the pullback into this zone, brief new high out. And this stock has a lot of range, guys. Remember, this thing went from 83.20 to almost 84. Okay, so that's 80 cents. That's a huge move. Okay, and this is a perfect example of this demand bar. How price every time comes into the zone rejects. Okay, so you need to train your eyes to see this all the time. Alright, this doesn't just happen inside of here. When I say it's important where it is on the chart. So what I mean by that is location where this happens. Alright, this is extend on the downside, vice versa. If it's going up, you will get a red bar. Potentially you can short into it. So location is important when we are trading. Another great setup was on the CNDT. This thing was a cheap stock. To prove to you that this works on any time frame, any stock. This thing went from 2 to 5 in after hours on Thursday, pre-market on Friday. Held around the 380s and at the open. Right, this thing, first 10 minutes, found some support in this area, guys. And then what do you see? There's a shock again, isn't it? Big green bar, demand exceeds supply. Pull back in the zone, safe entry, new highs, and you're out. Alright, let's hop over to the 3 minute, which I prefer even more. Look at this. Of this support area. Fat green bar. The chance of this to come down and break this, very slim. So 85% of the time, this is gonna make a second leg up. So look at that. Look at them odds, guys. 85% of the time, this will have a follow through. Okay, so beautiful entry on the dip. Scale out, new highs. I mean, this thing went from 390, 380 or whatever, 386 or even 390 if you use your entry. You would have made 40 cents on a cheap stock. That is huge. That's a huge return. Okay. and the rookies are buying breakouts. Look at the price they're getting in. We're selling our shares to them, all right? And they're helping us push the price even higher. We're buying in here, institutions, hedge funds, right? Although they probably don't trade this price range junk, but it's just for example purposes, guys, to see the potential, all right? If you can spot supply and demand, that's all there is to it. All right, supply exceeds demand and vice versa, demand exceeds supply. Okay, so this is pretty much what I wanted to talk about, for you guys to train your eyes and to use multiple time frames at the open. Okay, top over to the 1 minute, then scale out to the 3, potentially the 5. So you pretty much get an idea of what the stock is trying to do at all times. But anyways, guys, this is gonna be pretty much it. I hope you guys learned a valuable lesson, and this is definitely gonna improve your trading if you apply this correctly. Let me know in the comments what you guys think, and don't forget to subscribe to my channel, and I'll see you guys next time.